Hello and welcome to another update video about AVAX. The AVAX chart still doesn't show any signs of bullishness on the smaller time frames, and on the larger time frame we can see very clearly that AVAX topped in an ABC structure. There's no way to count this as something more bullish. It has to be an ABC. Even you can even rule out a 1-2-1-2 setup, which has always been a bit of a hopium count, but that can be completely ruled out because AVAX broke below the last swing lows. So I'm tracking here an ABC structure with a 5-wave move to the downside, which bottomed in December. And then you could argue that this was wave 1 and we already saw a very weak wave 2. And what we see down here could be a leading diagonal in a wave 1. And it's basically a disaster chart as long as the chart is below $18.54. Below that level, as long as we hold that level, and well, as long as we don't break above $18.54, we have to expect a third wave breakdown. Basically, after the next rally, this is where the fun could start to the downside, because the third wave, well, not rally but breakdown, this could be, yeah, this could take it below $6.25, which is the long-term bullish support. So if we go below that level, I mean, then the yellow count is ultimately confirmed in my opinion, okay? Now, what I cannot rule out is that we get a larger rally and that actually wave 2 here, larger degree wave 2 is still in the making. So this wave 2 sits actually here, okay? That's possible. In that case, resistance would be all the way up to $82.23. So if 1854 breaks, we can look at the next larger area up here, resistance area, between $36 and $82. Only if AVAX can rally above $82 and sustain there in a 5-wave move, or something bullish, in a bullish structure, we can really long-term look at bullishness. Because the problem is this is just an ABC structure. There's no way you can count a 5-wave move here. Yeah, there's no way you can count a 5-wave move. Even if you try to include this, then you have a 1-2, very questionable anyway. I would rule out this startup candle. Is not, you can trust it. But then you have 3, 4, 5. I mean, they could count it as a diagonal, but very unreliable. And of course, I'm not saying this will die, not necessarily, but I'm highlighting here the risk. And surely, I'm basically forecasting that we should get a bit of a reversal here soon. And a break out of this descending wedge could, first of all, take us into the area between $14 and $18.50. And if we get a break above that level, I mean, then we can look at $36 to $82. And then we have to take it level by level with AVAX, in my opinion. I think we have to take it level by level. I'm not saying this couldn't be bullish, but the chart needs to prove it to us. Certainly, we are very close to support now. We have 5 waves down there in this structure here, and I call it a diagonal structure. So it is either a leading diagonal, which would be my count here, wave 1, and then a wave 2 corrective rally. Or it's an ending diagonal, and we have to assume that probably this wave 1 here never finished, okay? And then, but then it takes us here into this region. I cannot really focus on something more bullish with confidence. I mean, I can always try to come up with something more bullish because an ABC structure could be a wave 1. Yeah, this is a bit of a hopium count. It can be a wave 1, but then the entire move up has to be a diagonal. It's a very, very unreliable count. But again, as long as the $6.25 level is holding, we can consider it. But that's why we're tracking the resistance areas. When they are broken, then we can look at higher, okay? We have to take it level by level, that's what I'm saying. I mean, from a more bullish point of view, yes. I mean, you can say ABC, I mean, that's the wave 1. And then we have here basically also an AB, okay? And then C wave down, but then the question is how do you count it? I would have to count it in a way where I say, okay, this is AB, very short, and then this is the 5-wave move down, basically. Yeah, 1, 2, 3, 4. Probably this is still running as 5, and then we have A, B. So very questionable, right? Very questionable B, and then this is the C wave, very long. Either way, also in this scenario, I mean, in both scenarios, bullish and bearish, I would expect a bit of a reversal here very, very shortly, because we are now coming into an area where we have several Fibonacci levels that are aligned, Fibonacci extension levels, and obviously here the $6.25 level is Fibonacci retracement zone. And ideally from somewhere here, I mean, even this 5-wave move down is basically complete or nearly complete. So it doesn't really need to come down any lower. It could do, but it doesn't need to. and then it could at least give us a bit of a rally into this region. If after this rally, we need to look at the structure. If after this rally we can hold a higher low, then it can take us into the next resistance area, and then we just take it from there. It's too early to make any moon count projections here for AVAX after this disaster structure has emerged on the chart. Okay, so again, very clearly, I'm not going to rule out anything bullish here, but these are the key pivots that need to be broken to unlock the next rally, basically. Okay, see it as a gate. We get to this area first, and then we can open the gate to the next one, get to this one, then we can open the gate to new all-time highs. And I'd be very happy for AVAX to make new all-time highs. I just have to highlight here the problems that are associated with this chart, as I have done for years. Yeah, I've always said that the AVAX long-term chart, I never liked this initial structure, but we'll see how it turns out. We'll see. It's certainly one of the weaker charts in this bear market. That's my update about AVAX. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.